What about life advice?
Well, life advice is, the most important thing, aside from the things I've talked about already, is really who you associate with. You want to associate with people that are better than you are. I mean, basically, you'll go in the direction of the people that you associate with, and you want to have the right heroes. You want people, if you want to emulate somebody, you better pick very carefully who you want to emulate. And when obviously you can't pick your parents, they're going to have an enormous influence on you, but you don't get a choice on that. But you get choices as you go down the line, and who you admire, who you want to copy, and the most important for most people in terms of that decision is their spouse. It's also important in terms of a partner in business, but the partner in life is the most important one. You want to pick a spouse that's a little bit better than you are, and then he or she, and you hope they don't figure it out too fast.
Great. Biggest mistakes people make when investing?
Well, they try to, they just don't realize that all you have to do is just buy a cross-section of America and then never listen to people like me or read the papers or do anything subsequently. They think that because you can trade, you should trade. You buy a farm, you buy an apartment house, you can't resell it tomorrow, and the cost of moving around. Now you get something handed to you, liquidity, which is instant. You can sell, and the cost of doing it are pennies, compared to other kinds of investment activity. So because they can so easily move around, they do move around, and moving around is not smarter than investing.
No, if you're interested in financial matters, you've got to have something to work with. I mean, I was fortunate in that respect because my dad paid for my education. If he hadn't, I probably wouldn't have become educated if I had to pay for myself. But so I was able to save $10,000 by the time I was 21, and that was a huge head start. If I hadn't been able to do that, and my first child came along when I was 22, so I mean the family. It's much easier to save it in those teenage years if you're lucky enough to be in a family where where your parents are taking care of your financial obligations. Every dollar then is worth making $10 or $20 later on. And so if you are interested in financial matters, getting a stake early is very useful, and getting knowledge early is very useful. So I would say you're well on the way if at 11 you're even interested in coming to a meeting like this. And if that interest is maintained, I would read financial publications. I would read whatever was of interest to me. I'd be curious about how the businesses around the town of Kearney operated. I would, to the extent that you can get people to talk to you, and people usually like to talk, learn about who's got good businesses in Kearney and why they're good businesses, and learn about the businesses that went out of business and why they went out of business, and just keep accumulating knowledge. That's one of the beauties of the business that Charlie and I are in, is that everything is cumulative. The stuff I learned when I was 20 is useful today. Not necessarily the same way, and not necessarily every day, but it's useful. So you're building a database in your mind that is going to pay off over time. But you have to have a little money to work with. So there's nothing like getting a few dollars ahead. Stay away from credit cards, and you can have a lot of fun if your mind goes along that track as you get older. Charlie?
Well, I'm glad to see somebody that has so early shown an interest in getting ahead. There's nothing wrong with getting ahead.
And actually, she may have the best idea about getting ahead by learning the name of my grandson.
Well, there I can give the young lady some advice. Before your feelings totally take over, you should look carefully at both parents and all four grandparents.
Write Charlie and let us know how it works out.
So my question is, what do you recommend for an approach to getting better and better at valuing companies?
That was a very, very good question. And in my own case, I started out without knowing anything about valuing companies. And Ben Graham taught me a way to value a certain type of company that would prove successful, except the universe of those companies dried up. But nevertheless, it was almost a guarantee against failure, but it was not a guarantee that these things would continue to be available. Charlie taught me a lot about the value of a durable competitive advantage and a really first-class business. But over time, I've learned more about various types of businesses, but you'd be amazed how many businesses I don't feel that I understand well. The biggest thing is not how big your circle of competence is, but knowing where the perimeter is. If you don't have to be an expert on 90% of the businesses or 80% or 70 or 50, but you do have to know something about the ones that you actually put your money into. And if that's a very small part of the universe, that still is not a killer. Think about the businesses in your own hometown of Talafi. Which would you like to buy into? Which do you think you could understand their economics? Which do you think will be around 10 or 20 years from now? Which do you think it would be very tough to compete with? Just keep asking yourself questions about businesses. Talk with other people about them. You will extend your knowledge over time. And always remember that margin of safety. And I think you basically have the right attitude because you recognize your limitations, and that's enormously important in this business. You will find things to do. 6 or 7 years ago, maybe not that long, 6 or 7 years ago, when I was looking at Korean stocks, for example, I never had any idea that Korean stocks would be something that I would be buying. But I looked over there and I could see that there were a number of businesses that met the margin of safety test. And there I diversified because I didn't know that much about any specific one. But I knew that a package of 20 was going to work out very well, even if a crook might run one of them and a couple might run into competition I didn't anticipate because they were so cheap. And that was sort of the old Graham approach. You will find opportunities from time to time, and the beauty of it is you don't have to find very many of them.
Warren, how would you define true success?
Well, I've said many times that if you get to be 65 or 70 and later, and the people that you want to have love you actually do love you, you're a success. I've never seen anybody that reaches that age. I mean, I'm not talking about somebody that's in extreme poverty or pain or something, but I've never seen anybody that, if they have a lot of people that love them, that is other than happy. And I've seen some very, very wealthy people that they give testimonial dinners to and name schools after and everything. Nobody loves them. Their own kids would say, he's in the attic, They never came.
What are, say, 3 pieces of advice you would give to people who are looking to succeed in business?
Well, by far the best investment you can make is in yourself. I mean, for example, communication skills. I tell the students that come that they're going to graduate schools and business, and they're learning all these complicated formulas and all that. If they just learn to communicate better, and both in writing and in person, they increase their value at least 50%. I mean, if you can't communicate, somebody says, it's like winking at a girl in the dark. Nothing happens, basically. And you have to be able to get forth your ideas, and that's relatively easy. I did it myself with the Dale Carnegie course. Some people wish I'd taken a shorter course now in terms of my talking later on, but it's just hugely important. And if you invest in yourself, nobody can take it away from you. I mean, and the second thing, which I'll get a certain criticism for not living it, but I do tell those students, that if I gave you a car and it'd be the only car you get in the rest of your life, you take care of it like you can't believe. Any scratch, you'd fix that moment. You read the owner's manual. You keep a garage and do all these things, and you get exactly one mind and one body in this world. And you can't start taking care of it when you're 50. By that time, you'll have rusted out if you haven't done anything. So you should really make sure that you just remember that you just got one mind and body to get through life with and to do the most with it.